Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. It's Friday as the markets start to calm down from what was a pretty huge week with the U.S. election and also the Federal Reserve rate decision. We head into the idea of what's in store for next week. Where are we now? What are the risks levels? What are the bias levels? I'm going to start off by taking a look at the New Zealand versus U.S. dollar. So let's get started. Now, we still have a number of hours left in the day, but I'm going to focus on the New Zealand versus U.S. dollar from a 4-hour perspective and outline where we are, what levels are going to be key. I assume that we're not going to have a huge move for the rest of the day. So let's take a look at this 4-hour chart and see what we've done this week and what we have to look forward to next week. Looking at it, the best thing you can do is first start by taking a look at the highs and lows, and the low price that we saw right here came down to this low price right here and this low price right here. Those are two swing levels where the market bounced. Now we fell below this level. When we moved back above it, we started its run higher, and then we came down, through it right through here on an extreme move. But the last time the price came down to that level, we did find support against that level, and that was the springboard to the upside right through here. So returning back to this level and finding support right here is was a nice little bounce that we saw the price move higher. Of course, we saw that move to the upside from trading yesterday. Saw the dollar move lower, and in the process, we also moved above the 100 bar moving average on the 4-hour chart. That should have been more bullish, and it was. And we saw the price then move up to this next swing area, which I had outlined as a level of interest coming into the week, and that's where the market found willing sellers against that level in trading yesterday. And since then, we've started to rotate back to the downside again. In the process, we've moved back below the 100 bar moving average on the 4-hour chart. That's this level right here. It comes in right around the 60 level, which is a nice natural level as well. That 60 level also held resistance right through here. So, it had some history in trading last week at least. The break below that level has the price moving back down toward another swing area down through here where we had a number of different swing lows and swing highs forming this level. Got a little wonky in trading last week, but in this week you can sort of see support against it and resistance against it right here and right here, and now we're back down toward it. So what do we look for next week? Well, if the price can stay below the 60 level, the bias remains more to the downside in my view. Get below this level right here down at 0.5970, and we can start looking toward the low, not from this week, but last week. And then this other low right here, which was, again, the low going back to this time right here before moving to the upside. So that would be the progression to the downside for the New Zealand versus US dollar. Now, conversely, if we can't get below this level right here and we start to move back above the 100 bar moving average on the 4-hour chart and above the 60 level, obviously this area right through here is going to be our key target on the top side to get to and through. Get above it, and also the 61.8% retracement of the move up from our August low to our September high would start have traders looking toward the 200-day moving average and other moving averages up through here, which with the 200 bar moving average of the 4-hour moving lower and the 100-day moving average, not far away from the 200-day moving average. So this whole area right through here would be a key target on the top side to get to and through on further upside momentum. This area, if tested, would provide I would expect some decent selling against the moving averages on the first test. So, sellers are more in control in the New Zealand versus U.S. dollar after the corrective move seen in yesterday's trade. We'll see if that momentum to the downside continues into the new trading week. The key barometer will be the 100 bar moving average on the 4-hour chart. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.